Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go over to those Bitcoin 4-hour charts. So yes, Bitcoin on the 4-hour after our pretty disgraceful inflation numbers. I say pretty disgraceful. I mean, I think the market was expecting 8.3. I think it came in at 8.6. So obviously a move in the wrong direction. People were expecting obviously it to come down, mainly against it's a year-on-year figure, and against March last year I think was like a 5% inflation print. So for us to accelerate against such a high base level is obviously is good going, basically. But yeah, things not looking good on the inflation front. Things not looking just generally good on various asset prices. Yeah, just it's not a good looking picture, put it that way. I mean, the only thing at the moment that is kind of pinning down inflation from obviously breaking up towards literally a double figure handle, so basically 10 or above, is the relative weakness in the goods price inflation, and unfortunately for that data point, is that it probably is transitory, to use that word, based on the fact that we have obviously we had a massive build-up of inventories, obviously with supply chains, people over ordering, building up inventories. That was what practically drove the most part of the first quarter positive GDP number. And then obviously when that was X'd out, we got a negative GDP number. I say we, I'm talking about the US. So inventories, yes, they built up. They are obviously a downward pressure on goods prices, and there is a saying that obviously goods prices is the main one to look for with inflation. Once you break the back of the good prices inflation, it's because services are kind of done on a contract basis, in real time. You can adjust the price of them easier, whereas obviously goods have a much longer feed through time through the full supply chain and the middleman chain and everything that they go through. They're a lot more, generally speaking, sticky. And the only problem is like I just said, I think it's just because we built up inventories, and then once they draw down, then up the goods price inflation goes. So it feels like we're just in a sweet spot with goods prices, and then ultimately we're not going to have that on our side either. And energy prices, I mean, there's no real looking back, it seems, with energy prices. There's just the demand isn't going to go away. Not enough at least, and the supply bottlenecks. Just obviously when you talk about bottlenecks, we talk about longer term. It's a longer term picture with energy. Bringing energy sources online is a longer term thing. I mean, it's just ridiculous. We pivoted towards this green energy without any real plan. I mean, I'm sure you guys have heard this 1,000 times. We pivoted towards this green energy without a real plan, without actually really looking at the numbers and seeing doing it gradually, basically. And then obviously that's going to have a massive detrimental. I mean, this whole scenario, even from the very beginning with the global pandemic, the reactions to the pandemic, that it seems so asinine, the responses, and then now the basically the results, and then obviously what the implications of that. It honestly, like, without being sounding like a conspiracy theorist, it does seem like it's somewhat orchestrated. It does seem that way, and it does seem like Russia is actually taking this opportunity. It sees like a weak spot. There seems to be we are proper going off script here, off piste here, but there seems to be like a global elite who obviously want to control the world, who aren't particularly bothered about any individual countries or their systems or anything, including they're not particularly bothered about the US population, the US currency, anything. They're kind of pushing towards a global agenda, and then I think Russia sees that and sees that it's a difficult achievement, and in the process they are obviously going to weaken the US. So ultimately, if we end up in chaos, the two fundamental ingredients for survival are energy and food. And what does Russia have? Lots of energy and food. The US has a lot of energy and food. However, it's like that meme. They are sticking the stick into their own front wheel on the bicycle regarding energy, and also that impacts food, because if you then obviously don't produce enough energy, then people will start planting, like planting basically food crops. Food crops will start being used for energy because they need to be, and then obviously the energy input costs feed into food as well. So I think Russia sees an opportunity just to know that if we have a real reshuffle of the global system, they're just in a strong position just by virtue of the infrastructure, so far as obviously getting energy out of the ground, and obviously food. And then interestingly enough, Ukraine is a massive food producer and does have big energy, does have big gas reserves also. Who would have thunk it, eh? Who would have thunk it? So yes, interesting times. Eurozone. I mean, we've obviously talked about US and Eurozone, Russia. Eurozone is just a bit ridiculous. Eurozone is literally just a basket case. I mean, the Eurozone is basically the start point of the global elites, in inverted commas, testing of a world government. They've obviously started initially with joining the whole of the Eurozone, well, as much as they could, and it's pretty much proving to be a failed experiment. I mean, the Eurozone is literally the sacrificial lamb between, obviously, with what the US is doing and what Russia is doing. The US is basically, Biden has said that he will supply the Eurozone with all the energy it needs, all the energy, all the gas from basically the LNG gas terminals that it doesn't even have. So it literally physically can't do it. But hey, the guy said it. The guy said it, didn't he? So I mean, it must be true. There is a saying going around. Obviously, the US is prepared. The US is prepared to fight Russia down to the last European. So yes, that is what we've got going on. Absolute ridiculousness. On the plus side, whilst we're looking at this global macro picture, on the plus side, we all know crypto is a risk asset because it obviously has basically risk capital pumped into it. It obviously a lot of the money printing, a lot of the extra liquidity in the system has pumped up crypto. Great. So that's pumped it up to prices higher than they should have been, and that is obviously deflating as that risk capital comes out. However, there is obviously the underlying dynamics of what crypto is good for. It is a good way of paying people in anywhere you want, and regardless of what anyone says about store of value, in a world of basically collapsing currencies and economies, it is a good store of value purely by the virtue that it will store some of your value, if not all of your value, if not give you more value as more people have to use it. So there will become the actual fundamental bid for cryptocurrencies once we realize, like, there is a ridiculous path governments are taking, and they're falling apart, and the finance 1.0 boomer finance is basically collapsing. Boomer finance died in 2008, and it has just been on some Frankenstein crazy life support, inflation, the monetary based system forever. So I mean, we got price controls to look forward to. We've got more handouts to look forward to. I mean, the inflation figures are all backward looking. So they're all backward looking. I think it was Arthur Hayes' article or someone that was talking about this. Inflation numbers are backwards looking, and I can tell you now, people are struggling at the moment. People are definitely not as flush with cash and as wealthy as they have been. That is a fact. that is going to massively impact demand. I mean, so far as the barometer of inflation that normal people see, I mean, financial markets, for the most part in the past have been able to detract themselves mainly from the average guy on the street. However, now with basically gas prices, with fuel prices, petrol prices, every single consumer uses them. They fill their tank, they drive past them, they see them all the time. As soon as we see certain handles, it's people see it. People will tighten their belts, people will stop doing things, people, I mean, it's happening now. But obviously it's going to take a while for that demand, that reduction in demand to show in inflation statistics. All on a backdrop of obviously food and energy prices are still going to go up because they are basically relatively price inelastic. People still need to use them and have them and eat and drive to work, do what they do, or the energy input costs into everything in the supply chain and food chain as well. Those things basically aren't going to change much. You can't really affect them by reducing demand. I mean, the only demand you can try and reduce the energy inputs with is say you can reduce the demand from certain sources and get them to basically cheaper sources, in which that can reduce the price. You can't actually reduce people. I mean, the world's energy demands just go up and up and up and up. So yes. Just a general side point, crypto specific point. Obviously, with Ethereum going proof of stake and Bitcoin will remain proof of work, that is an interesting dynamic there. There could be a massive push to Ethereum, although the price chart doesn't reflect that at the moment. However, you often see fake outs in opposite directions. Right, there's just now that I've got all that off my chest, because we haven't done a video for a few days, there's not been too much to talk about. You can see for ages, like literally since practically the 12th of May, a whole month, we've not really done a lot. We're basically at the same level that we were at. That is to say, that is not too bad in the face of what has happened here. Inflation numbers obviously hitting the stock markets, hitting finance 1.0 hard. Let's look at some of these charts. So yeah, inflation numbers whacked us straight through the support area. We'll just extend this along. We are basically looking at taking out these lows potentially. We'll just put a horizontal here. At some point there is going to be there's going to have to be some sort of a try to rescue markets a little bit. However, whilst ever it's an orderly decline, I don't think there's going to be that call to action. It is literally a case of like of the water boiling the frog gently, as in that's what's happening with the Fed. The Fed will only kind of jump into action if we get a massive move down in stocks. This is relatively orderly, not really much. Not like I've been saying, but I think the main thing is going to be stimulus to people for those food and energy costs. Basically, I mean, it's already been talked about in the UK with energy. It's going to come in for food. It's going to come in for more energy, these stimmies are going to be incoming. Put it that way. These stimmies are going to be incoming, and it's just going to be more targeted, which it wasn't last time. Or I say it wasn't last time. It did actually just accumulate with the richer people. Basically, like if you look at all the loans and everything that was given out in the US, for example, and what happened with asset prices, just the rich got richer. All it did was help promote the wealth inequality and the wealth gap. It will be more targeted, where they will just be giving the handouts to just basically the poorer people. In what is potentially will be a UBI, and like I'm saying, this system is in collapse. Who knows how long it will take? Part of me thinks that these things always do kind of last longer than you think. However, like I've said, the system died in 2008, but then part of me then says things can accelerate pretty quickly. It's going to be very interesting times, because these markets are not looking good. And like I said, I think the main point we've got here is that goods, obviously demand is going to go down, but food and energy is going to stay up anyway. Housing costs at the moment are going to stay up. Housing costs are something that kind of has to stay up because the Finance 1.0 system is heavily reliant, obviously, on the banking system is heavily reliant on, obviously, housing prices not going down. They are more, I mean, everyone feels like they are in the housing market, but ultimately, it is the banks that carry most of that debt. I mean, I guess the Fed has been buying mortgages, but they're not buying mortgages anymore. So, and they're actually wanting to sell mortgages and get out of the mortgage business. So, what does that do to the housing and mortgage market? There are problems there, but like I said, if they collapse that market, if they even it's not even a collapse, it's like it's a leveraged market by definition with mortgages, and we all kind of know it doesn't take much of a drawdown to blow up the leverage in the market. It doesn't take much of a drawdown for your any equity people will have in property, especially people that have bought over the last few years at these elevated prices and then obviously increasing rates. It doesn't take long for those people to be in negative equity, and then what? So yeah, let's look at some charts anyway. S&P wrecked. Gold looks like it is finally reacting off the back of inflation numbers, looking to try and break out the top of this. I think now it is kind of setting in. It is definitely setting in for myself as well. You can probably tell from what I've been saying, that yeah, I mean, these energy prices don't seem to be coming down. That was my main thesis was energy prices could come down. They can't realistically stay up there, but I was wrong about that, and they're staying up there, which means inflation is staying basically. And obviously there's a food price element. There's the even with the foods, the food input costs, fertilizers, etc. Obviously all the energy costs as well. There's no light at the end of that tunnel as far as I'm concerned. So yeah, inflation, I think, is now fully here to stay. I mean, it doesn't really matter what the Fed does, what the Eurozone does. We are behind the curve. We will always be behind that inflation curve. So real rates are always going to remain negative, at which point we're still going to just remain in an inflationary environment until literally this financial system collapses. No one's particularly talking about the impact of obviously the Japanese yen getting wrecked. I mean, the main takeaway from this is that at some point inflation will obviously hit the unbearable. There will be a pain point in this with this obviously decrease in Japanese yen, with the inflation that the Japanese people will be dealing with, and then they will want obviously not to pin these bond yields down, in which case then obviously, because this is what is happening, they are basically pinning bond yields, which is then killing the currency. It's literally like a death spiral, like we see in crypto. So ultimately they're going to have to not pin those bond yields, and then the currency can have a breather. However, if that underpinning of bond yields, that pinning down of the bond yields, actually provides a bid to global market bond yields, so bond yields in other countries basically, and obviously most notably the US. So once Japan basically hits the pain point and gives up on this, we're going to have a big up leg in obviously Japanese bonds, and then ultimately the rest of the world's bonds. Because I know we talk about the US as the risk-free rate, however there is obviously the massive bond buying elephants in the room of the Japanese that basically are actually realistically underpinning global bond markets. So yes, we've got that coming. That coming. DXY strengthening up. I'm probably going to do a video on I'm probably do more macro videos now, because we're at one of those inflection points now. There are lots of interesting things out there. Lots of podcasts that I'm listening to that I could probably summarize. But yes, literally we could see that hyperinflation it's not hyperinflation, is the wrong word, but an inflation in the dollar price in the face of everything literally destroying world markets. People think yes, that'd be great for the US. No, it's not great for the US, because it is also gonna come with increasing bond yields. It basically is going to massively, I mean, the US companies basically deal with the rest of the world. So if their currency is going up strongly, all that money they make across the rest of the world is going to be worth less relative to their currency, and they are going to have massive hits to their profit margins. Also, with the bond yields going up, there ultimately will be a buyer at certain levels of the bonds that are having increasing yields, because they will look attractive, and investors across the world are going to then dump US dollar denominated assets to then put into US treasuries. So what is that going to do to obviously US stock markets and yeah, even potentially like real estate markets, who knows? But yeah, mainly the stock markets. People are going to start dumping them just to put into treasuries at like what let's throw some numbers out there, like 10% yields. They'd be like, yeah, just bang them in treasuries. I mean, put them in treasuries. The dollar strengthening as well anyway. Just YOLO, like it's great, good times. So yeah, there's that obviously looking like it is going to take another macro leg up. Pain is a pain trade. It's like honestly, we are now finally looking at like we are gonna quickly hit these end stages. We are quickly gonna see price controls. We are quickly gonna see more stimulus checks to people. This is the point. This is the fourth turning. This is the point in the cycle where things get real. Things are getting real, guys. Things are getting real. I mean, Bitcoin dominance going up. People are moving into Bitcoin. Obviously moving out of the higher risk altcoins. Even Ethereum wrecked against Bitcoin. Ethereum, which has proof of stake income in. Like I said, all the bullish things for Ethereum, it still is number 2 to Bitcoin, so it's struggling against Bitcoin. Ultimately, I believe it will become number 1 against Bitcoin. Ethereum will overtake Bitcoin. And I think that could happen relatively soon, but we shall see. Nonetheless, we should expect a bounce at these levels, if not at these levels in this ratio. If not, it is curtains. The USD one, obviously here. There is some FUD going around about obviously State Teeth and Celsius and having to dump it. I mean, it's not legitimate FUD in many respects, because it isn't technically is a peg. It's just your claim against State Teeth once you can get it out of the staking contract. However, there will be arbitrage opportunities. So if people that have basically locked up their Ethereum, they're bullish on Ethereum, they're now turning bearish Ethereum, they want to dump their Ethereum because they think the price is going to go down, to basically dump their staked ETH that they got from staking their Ethereum. They'll do that and then buy it back lower. There will be an arbitrage opportunities that people will sell ETH and then buy staked ETH, and that will inherently drive the actual price of ETH down. So legitimate concerns for the price of ETH, not for obviously just ETH itself as a functioning asset. It's just an arbitrage. It's just basically people thinking the price of Ethereum is going down, so then they sell, and then the price goes down. Who would have thunk it, eh? Market dynamics, eh? So yeah, there we go. What else do we want to look at? Nothing else really. Do we want to look at stochastics? We kind of do normally. To be fair, price hasn't moved too much, so longer term stochastics might not look so bad. 4 hour getting down deep here, so probably will struggle to see a breakdown further over the weekend. 10 hour getting deep as well. 12 hour turning down, but still got room to run. Daily has turned down and has got a lot of room to run, so that doesn't look ideal. Buy daily has just turned down. 3 day not looking ideal. 5 day is looking to turn back down, so yeah, potentially in trouble. Weekly is still coming down. Bi-weekly is coming down. So yes, the monthly coming down. Stochastics are not looking good. Stochastics are pointing down. So yes, I mean, there we go. I mean, what is going to happen? Are we going to trade lower? You can kind of see this larger range we're in. We are testing it. You can potentially look at a head and shoulders there. Yeah, we could certainly come lower. Like I said, there is a lot of froth in this market. People need money. Times are hard. That has to come out. Then obviously we'll have to see what happens with stimulus and the actual boom of finance. Does it start to look dicey? Does it start to collapse? Do we start to then get a real fundamental bid into cryptos, not just that froth? Yeah, probably that is probably the play. The only problem is we've got a good chance of obviously coming lower to obviously start off that process before ultimately higher. So there you go. Yeah, there you go, guys. Remember this. We're going to do some more macro videos. But yeah, remember this is not a financial advice. I'm not a financial advisor. Oh wow, apologies for the longer video this morning. Kind of makes up for that. The less videos we're getting. We got a longer one now where I just blur out all my thoughts in one go. So yeah, there we go, guys. Thanks for listening. Yeah, not financial advice, and I shall speak to you guys soon.